All right, for those you have joined us back here on our Facebook Lives, we really appreciate you coming back and wanting to learn a little bit more from what we're doing. We had a little bit of a hiatus there because we had the senator on yesterday, but hopefully you've all been able to see that on our Facebook and our other social media. But really excited today to move forward with these, and we got two very exciting presenters here. We have Kasey Pipes and Scott Corley from Corley-Pipes Consulting. So they are government affairs consulting, and we'll let them explain what they're doing, but they have 30 years worth of experience in DC and dealing with some of these matters. So really exciting to see all of this, but I'll turn it over to them and let them talk about what they're doing. Thanks a lot.
Hey Chris, thanks so much. I'm Kasey. Nice to meet everybody. Thanks for joining us. I wish it was under better circumstances, but as Chris mentioned, we are Corley-Pipes. We're the only DC-based government affairs firm, or I should say government affairs firm that is based in Fort Worth. We do most of our work in DC, doing federal government affairs, representing a dozen different North Texas clients, most of which are in Fort Worth. So we've been pretty closely monitoring what's been going on, both at the White House and Congress and throughout the agencies. Scott and I are both Fort Worth natives. I'm based here. Scott runs our DC office. We also have Democrats on staff, so we're bipartisan, and we collect our intel from leadership on both sides of the aisle. So what we wanted to do for the next few minutes is kind of walk you through sort of what we know, what's coming next, and then obviously take your questions. And keep in mind throughout this conversation today that we're in kind of a weird spot here where phase 3 has been passed, the legislation has been passed, it's been signed into law, but the implementation of it is still sort of being decided as we speak. And those of you that have done government affairs work or spent a lot of time in DC, you know that once Congress and the president agree on legislation, then there's an implementation phase, there's guidance that's issued, what was the intent of Congress, they're trying to decipher how to actually put the terms of the deal into effect. And so some of that is still a little bit of a gray area right now, and Scott can walk us through some of that here in a minute. But I think the two main pieces that obviously I'm sure Senator Cornyn covered yesterday, obviously the SBA piece, the $377 billion, which goes primarily to the 7A loan program. This is, as you all know, the primary SBA instrument that they use. They've made some significant changes to that instrument. They've raised the guarantee to 100%, and they've doubled the amount from $5 million to $10 million of the actual loan, and they fixed the interest rate at 4%. Those are significant changes that will benefit anybody that applies for and receives this kind of money. I should also mention in the category of a small world that the person at the White House who is coordinating the SBA program as part of the stimulus package is Stuart Young, who some of you may remember worked for us and our firm a couple of years ago and then left to go to the administration and is senior advisor to Ivanka now. The other piece is the PPP. This is the Paycheck Protection Program. This is essentially where you can apply for money based on being a small business. You can apply for essentially up to 2.5 times your payroll and expense costs per month. And so that is something else that people are going to very much want to take advantage of as well. There's also, I should mention, phase 4 stimulus legislation that's already being discussed. So with that, let me hand it over to Scott, since he runs our DC office and has been monitoring phase 3 from the beginning and is now monitoring the conversations on phase 4 as well, and let him talk for a minute, and then we'll open it up to questions.
Thanks, Kasey, and thank you everyone for joining again. As Kasey said, we wish it was under better circumstances. These kinds of bills, they demonstrate to some extent, the ability of Congress to do work if they'll just set aside their issues and differences. But unfortunately, it often takes really yeah, really tragic circumstances to bring him to this point. So phase one and phase two bills, those went through pretty quickly. Phase three was very much a political exercise, and we knew that it would be, in spite of everyone's willingness. The devil is in the details of almost every bill. And I say that as prelude. We can talk about phase three, and we'll obviously, since that's the bill that's passed and that's the bill that they're working on implementation around currently at the agencies. But with regard to phase four, I just want to start by saying lower your expectations. It is extremely unlikely, given the way that phase three came together, and it was questionable that it would come together, yet it was absolutely clear to everyone that they had to do it. So that's prelude to what's in the future for the cooperation between the parties and the cooperation between certain individuals. I'd say that most of us, those of us who worked in the Senate and the House, people that I am on, group emails with and group chat rooms in group chat rooms talking with about these developments. All of us come from leadership backgrounds or backgrounds where we drafted legislation. I was on the Hill during 9/11 and watched the cooperation completely disintegrate back into partisanship. It will happen again, and this is an election year, and both sides are in a sort of hostile place on hold. And so with regard to phase four, the only people that are actually working on and talking about phase four right now are the Democrats. There's some Republicans who are willing to acknowledge that there may be a need for phase four, but the position of the Republican Party currently, especially among House Republicans, is they want to see what happens with phase three, look for a few months at the impact on the economy, and then decide whether or not there needs to be additional spending. One of the real problems will be the actual amount of money that's being expended. $2 trillion, to give you a sense of things. If you put $2 trillion just flat, like you do in your wallet, on top of each other, it go 160 or 140, 150 miles into space, or excuse me, 150,000 miles into space. That's how much money we are talking about. It's hard to get your mind around that much cash. And so the idea that they would go back and then spend another $1 trillion or decide to do so now is not going to fly with as many people on the conservative side, especially those who are fiscally conservative. So I just want to lower expectations that any problems we see with the emerging phase three implementation will naturally be dealt with in phase four. And certainly your chamber, the Fort Worth chamber, folks in government here at the city and county level, they'll be aware of this, and obviously the news will be reporting on it as it plays out. But for now, it's going to be really important to provide feedback to the government, to use the portals that will be emerging over the coming weeks regarding how these loans work, to share with lenders that you go to, and make sure your lenders are then reporting up the chain, especially those that work with Small Business Administration, problems or inconsistencies in the way that these loans are applied versus what they're supposed to do. And they're supposed to help people who are having a hard time keeping their businesses running and having a hard time keeping people employed. So with regard to phase four, if it does happen, the most likely items, and I've got a little list here, are targeted infrastructure relief that relates to schools, water, and broadband. Some more funding for states and localities relative to the expenses they're incurring in treating corona. Extension and expansion of payments to individuals. I'd say expansion of unemployment benefits would be a likely one, and then dealing with certain mortgage issues, people losing their homes. There are a lot of other unlikely things, and all of this becomes even more unlikely if Congress returns to what it normally does and starts trying to attach all sorts of unrelated items to these bills. And the more partisan this becomes, the more likely those sorts of lobbying and attachment efforts will be. And the more weight that they add to the bill, the less likely that it carries itself through Congress. So we'll know probably by the end of the month what the Democrats plan to propose in the House. They don't expect to fully engage in drafting until late April. We'll know probably in the next 6 weeks to 2 months whether or not the Republicans will engage in a bipartisan exercise with them to try and produce that legislation. And at that point, if it is moving forward, it certainly will be worth efforts from all businesses and all chambers to try and influence and at least guide some of the programmatic challenges that will emerge. There's no doubt that there are going to be problems with folks being able to access this money for reasons that are specific to your circumstances. And I noticed in the questions that we saw from the chamber, some of you are already asking about specific circumstances that you don't see covered in the so-called guidance we have so far. There's not a lot of guidance to share. So just phase 4 possible, but phase 4 not likely at this juncture. We should not rely on it as a way to fix other problems is my point. As for phase 3, we're going to see guidance from SBA by Friday probably. They've already summarized and tried to explain, basic eligibility concepts on their websites. They've put out guidance to all the members, all the congressional members, Senator John Cornyn, Kay Granger, Mark Vesey, Roger Williams. All these folks have the same questions coming to them that you have directed at the chamber. They're trying to provide information, and a lot of it looks the same, which tells us it's coming from the same source, and that source is the White House, the Treasury, and the Small Business Administration. Those sources being the same means that they haven't made the kind of progress that would allow them to be specific enough to answer questions that maybe will give you some comfort that you do qualify. And some of your questions, and let me address the ones that seem to be the most common, these payroll and full-time employee questions. So the intention is this: they want to help you cover your payroll costs. And they're going to do that through a formula that takes your full-time employees and looks at their salaries. I saw a question over and over about whether or not employees who make over $100,000 will not be counted. That is not the intent, and that's not my reading of the actual legislation. The actual 100,000 threshold applies to how much the formula will count. So if you have an employee who makes $150,000 and you want them to be considered under the formula, or they're required, and that's not clear, do you have to count all your employees in order to get these loans, to have them originate, or can you pick and choose how you want to structure it so that you're only counting employees below 100,000? I'm not sure, but it's clear that if you want to include someone who makes over 100,000, you can only include them in that formula up to 100,000. And that's why the confusing language that seems to be driving this, well, do they count or not count, or can I count them or not count them? That's why that confusing language in the guidance appears. When they say that when you lose your ability for loan forgiveness as a result of reducing wages, or at least the total forgiveness that you can expect for example, for the Paycheck loan, the one that I would suggest most of you look at as your best option because it's more favorable and because it has the loan forgiveness. If you're worried about maintaining your eligibility for that forgiveness, the person who's making over $100,000, if you reduce their salary, let's say they're at 150 down to 130, my reading is it has no impact on the formula. In other words, you did not reduce your overall payroll by any percentage that counts within the formula. In reality, you did reduce your payroll costs, but for purposes of examining whether or not there's forgiveness in the loan, it's only if you begin to reduce people that are either making less than 100,000 already, or if you reduced someone that you counted in the formula from, let's say, 110,000 to 90,000. At that point, the first 10,000, 110 to 100,000, that doesn't affect the formula. But once you start dropping it below 100,000, because you could only count the employee up to 100, you're impacting the way that your formula will be viewed when they look at what level of forgiveness you can expect within that period of time post origination of the loan. So I know that's about as clear as mud, and that's again based on intent. But the goal is not to exclude people who are in an employment situation based on what they make. The goal is to only support employment costs up to a certain level of salary per employee. And if you look at the logic of why it cuts off at 100,000, look no further than what they did with the direct payments from the IRS to individual taxpayers. So you get $1,200 up to $75,000 of your income. And then every $100 above that amount, it begins to reduce and goes to zero once you hit 100,000. So when they were negotiating with each other, when they were arguing in the room with each other, the Democrats and the Republicans, $100,000 is in their mind the demarcation point between those who need a lot of assistance and those who need less assistance. That's the only reason those numbers keep showing up. It doesn't have anything to do really with someone not being eligible or an employee not being eligible for counting, as far as I understand the language and as far as I know the intent to be of those provisions. So SBA guidance by Friday with more specifics. I think I've already said the Paycheck Protection Program is the best program, I think, for most businesses to try and pursue, primarily because of the forgiveness that's associated with it. The terms are very generous. It's not based on primary need. You will not be excluded from being able to apply based on whether or not you have unsuccessfully applied for other loans. That does factor in normally. They also don't exclude as many businesses. We have a client that is a nonprofit that also is religiously affiliated. They are excluded from another program option. The most money has been dedicated to paycheck protection, which again, if you think about political sellability, and I don't mean to be cynical about it, but these guys can agree on one thing. They don't want a bunch of unemployed workers thinking they did nothing for them. They don't want a bunch of businesses who employ workers to tell their employees as they're firing them, Congress did nothing for us. So their entire focus and energy, and quite frankly, it's in the right place, is on making sure that we keep people employed and that these thresholds really have more to do with how much we're willing to invest in making sure that happens from a paycheck perspective above a certain threshold. As far as the Treasury side of this, so SBA is going to deal almost exclusively with companies that are 500 employees or less. And I've had a few questions from people who have multiple businesses in multiple sites around a region. You might be in different metropolitan statistical areas, meaning that your customers are different in every place, your employees are different in every place. And so you might be a franchisee, but you may also just have businesses in all sorts of places. Under normal rules, the SBA will not give this kind of loan to anyone with over 500 employees cumulative, full-time employees or seasonal workers, depending on how they measure the quarters. This bill, CARES Act, lifts that restriction and does allow for different franchisees who are defined in various ways. I think you have to be part of the small business investment. You have to be part of existing programs that identify you as a specific type of franchisee or a specific type of business owner. But the point is that you could technically try to get these paycheck protection loans as an employer with more than 500 employees. I think, in fact, what's going to happen is that the Treasury side of this, the 13.3 emergency funding authority that the Treasury has and is setting up, is going to take on all the tasks of everyone over 500 employees, and that the SBA is going to focus almost exclusively and only on those under 500 employees. It's not a division that's clearly made in the law, but this is how these things work within administrations. They're going to try and do this quickly and efficiently. I'm not saying that if you're above 500, you shouldn't pursue SBA opportunities early right now. I'm saying that it's unlikely that that will, for any period of time, be the primary means by which more than 500 full-time employee employers will be able to get relief, that instead you will be directed to the Treasury. There's some good and bad in that as well. The Treasury is now contending with how to adjust their risk assessments in order to qualify people for the loans that they would receive out of those Treasury funds under 13.3 authority. It's a very high threshold normally with regard to your credit. And because they're trying to help people who are distressed, who might naturally have a bad credit situation or at least be deemed high risk, they're going to have to adjust their risk assessment. That's what's taking the most time, but they are issuing guidance a little bit at a time. With regard to the airline industry, which will be controlled within the Treasury, they've already issued guidance. It's on their website, and how they're going to provide loans is a little bit clear because that was the most immediate need, and it was certainly laid out as its own separate provision in the law. But the provisions that allow for other businesses to borrow, especially under this discretionary authority, which is hugely important for the administration. They have extraordinary authority under this bill once they lay out how they plan to use it to waive certain requirements under the bill itself, waive other Treasury requirements with regard to lending, and provide ample large loans at very favorable rates to basically whoever they deem necessary, or whoever they deem as qualifying as distressed by their own measurement of what distressed is. So for large employers in Fort Worth and in Tarrant County, for example, there will be an opportunity to look at a very flexible way to try and fund your business. And in many ways, that's better because large businesses have different scale issues than small businesses and will probably need that flexibility. The Treasury is certainly better situated to manage that. So I'm just going to stop there because there's a lot, again, we're trying to unpack. I would just qualify everything by saying, I understand the intent, but we haven't seen how they plan to implement. There will be a lot of problems, and probably one of the biggest issues will be the volume issue that they're facing. They've got to distribute an enormous amount of money through mechanisms that are designed to distribute a lot of money. And so they're moving from big to massive. And as a result of that, finding enough lenders, finding enough ways. Think about your bank right now. Some of you are having problems contacting your bank. They're just overwhelmed with calls. This is going to happen with regard to these loans. There will be a logjam, even though paycheck protection goes through local lenders. Your local lender is going to have to find a way to process a lot of paperwork and a lot of loans very quickly. They are working very hard to try and figure out how to do that in a way that's both responsible, but extremely responsive with haste. So we know intent. We don't know precisely how everything is going to be worked out, how all the processes will be moved forward. But that is what we expect to see the beginnings of by the end of this week. Chris, I'll let you take it from here, or Kasey, if you want to look at questions, or if we have questions from the group, we're willing to take those.
Yeah, I think if we could go to Chris on the questions, the one thing I would add is because we are in such a period of flux, we're happy to answer questions offline. Our website has all our contact information, both offices, the Washington office, the Fort Worth office, as well as our phone numbers and our emails. So feel free to check with us, or Chris can certainly connect you with us. I mean, we're happy to be a resource going forward as we all try to figure out the implementation together. So, and I think we may even do this again at some point, Chris was saying. So with that, Chris, why don't we go to questions?
Yeah, great. Thank you. So one of the questions that I had, we talked about that breaking threshold of 500. How small can you go? I mean, 1 person, 2 person, 4 person kind of operations, are they still eligible for this?
Absolutely. Yes. There's nothing too small. The cap amounts are on how much you can borrow. But we think this is probably, from a how long can we keep ourselves afloat perspective. This phase 3 bill that was passed really is meant to deal with the next 2 to 3 months. Again, a stack of money that's 160,000 miles into the air that only lasts 2 to 3 months gives you a sense of scale here. We've got a lot of people that need a lot of help, and $2 trillion really just doesn't go far given what it's meant to do.
Yeah. So another question we have here is, what's the best point of entry? We talk about SBA managing this versus Treasury and the banks. If you're business owner, should you start with the SBA? Should you start with your bank first? What's the best process to go forward?
Go to your local lender. Lenders who are eligible, SBA lenders, they'll know whether they are or not. Any federally insured depository institution essentially can provide these loans, but it's much better if you know the people there. I mean, the qualifications bar is very low, but you're going to have a lot of questions, and knowing how to position yourself with respect to making sure that you can qualify for loan forgiveness. I mean, that's a huge part of this. To borrow this money and then have a large portion of it forgiven should be a major factor in why you pursue, for example, paycheck protection money. And so having a partner in this that that's the way I think you would want to do your business anyway, but it's certainly under these circumstances. There is, the SBA does have an emergency loan that they're still trying to work on guidance around. You can apply directly to the SBA for that, and I'm not seeing in front of me any of my notes on what I thought the program might do. But again, I think it's more restrictive, and I don't think it's as generous with respect to the loan forgiveness, and as well as the other qualifications that I mean, frankly, there aren't that many that you have to meet in order to qualify.
So we talk about the disaster loan program with the SBA. There's the 7As, the 504s, and then you have these programs through this act and the payroll protection and all that. Can you apply for more than one? Can you work with your bank to do that? Should you cultivate all options, or just specific ones until one doesn't work out, then go after another one?
Look, this is my own advice as a small business owner, and frankly, knowing that it's chaos, go for all of them. If you can't, they'll tell you. Go until someone says no. Don't obviously represent yourself in any way but a truthful manner. You don't want to, disqualify yourself. But unless you see an affirmation. So for example, it's not clear to me that people who try to take the tax credit, if you've had a substantial reduction in your net revenue over the last quarter, or over the quarter that's been impacted by the COVID-19 virus, or excuse me, the coronavirus and the COVID-19 disease. They say you can get a substantial tax credit, but in the fine print of what I've been reading, it says unless you receive an SBA loan. So that's what these programs are. They're SBA loans. So what does that mean? We don't know. But I would just, go for all of it. No one's going to, I think, immediately leap to the conclusion that you're trying to game the system or that you're doing anything nefarious. And so good faith adjudication is a word you're going to hear more and more, with regard to these programs. If you're acting in good faith, there's no reason why you shouldn't apply for as many as possible.
And so we talk about using your private bank. How do you know if your bank is an SBA? I mean, obviously you're going to call them, but is there a list out there that, you can go and you can search and see who the SBA lenders are?
Absolutely. You go to www.sba.gov, and I bet there's a link directly on the front page of lenders. There certainly will be, a link to all of these programs. Once they issue guidance, there will be entry points, probably ones redirecting you to local lenders. You'll do a search based on where you're located. And then from there, they'll guide you to a list of lenders. The other programs will also be listed that you have to apply directly to the SBA in order to access.
Okay, great.
They do have a list. I know that for sure.
Sure. We had one question that came in here, and I'm not sure if you'll be able to answer or not, but talking about LLCs and disbursements, can that be counted as payroll if it's not necessarily in the payroll category?
So I'll read you a list of what is included in payroll costs. Salary, wage, commissions, or similar compensation is the very first one. Cash tip or equivalent. They have everything from, vacation, medical or sick leave.
Healthcare. Yeah.
There's healthcare in there. Look, they are definitely about to issue guidance. They're going to first issue guidance for businesses at the Treasury and then contractors. So to the airline question, they are going to announce what the airlines need to do because there's hard deadlines for them to apply right now, and they have. But they've also announced that they plan by April 10th to announce for contractors how they will be able to apply at the Treasury level. I think we look at that as a guide to what they're going to be doing and how they're going to be ranking things. An LLC who is taking money out for themselves, if you're a consultant, it may have less to do with your status as an organization, whether you're a limited liability corp or a partnership, whatever the case may be. It may have more to do with the way you receive your income and the type of work you do in the end. But I can't imagine that they're going to, again, without affirmatively excluding in the CARES Act, exclude anyone from eligibility. But this is where that guidance and where the beginning of the process of lenders going back to the SBA and saying, what do? I just got this question. I've worked with this person for 10 years. They have this type of business. I don't see how I'm supposed to process this, but I think they qualify. That will drive, a frequently asked questions section as they begin to try and determine, okay, in these special circumstances, we'll have to do these things. I have not seen anything that excludes the scenario you just laid out, though, Chris.
Okay. Well, yeah, and I appreciate you you're talking about the aviation industry and the difference between the OEMs and the airlines versus coming back to the contractors. In Fort Worth, heavy aviation aerospace industry here. So we've gotten that question a lot. So it just sounds like, give it a little bit of time and there'll be some more guidance around the contractors versus the OEMs and how that's applied for. But still, those companies could still go to the SBA and make application if they're under 500 or in that range. They could certainly go after some of those programs now.
Absolutely, and there are many, and they're around the country. I mean, Lockheed supports as the OEM a lot of contractors, hundreds of them all over America. So whatever happens to them, there's downstream effects in the supply chain. So again, I can't see that they would not address that. We're just dealing in such a tight time frame. They're on the one hand triaging, and on the other hand, they suffer from the problem of not knowing what they don't know.
Mm-hmm. Well, good. Well, I think that covers a lot of the questions that we had, because a lot of it was revolving around how do you access the funds and what's the next steps and who do you talk to and a lot on that, the payroll protection. And so I think we've covered a lot of territory here. Is there anything else that you guys think that we've missed here for our audience?
No, but again, this is a very fluid situation. So if people do have additional questions or concerns, as I mentioned, we're happy to be a resource. We're continuing to check in with our contacts on the Hill and in the administration on a daily basis. And so we'll have more information each day. So we're happy to talk further offline, or if anybody wants to call us or email us. We're all in this together. As I said, we're the only government affairs firm based in Fort Worth. So we care about the Fort Worth economy, the Tarrant County economy, and we're happy to do everything we can to help get people back on their feet during this trying time. So don't hesitate to reach out. We're happy to be a resource.
Wonderful. Well, thank you very much, guys. Really appreciate both of you coming on and sharing your wisdom with us. And if there are other questions that we didn't get to or didn't get asked, then please feel free to send those in, and we'll work with these fine folks, or we'll work with some of the other folks around the community to get those questions answered for you. So thanks for tuning in again, and hope to see you again tomorrow. Tomorrow we're going to be talking about HR and some of those layoff questions and unemployment resources and hiring resources and the companies who are hiring to help those employees who might have been displaced at this point. So thanks again, and thank you, gentlemen, and we will talk to you soon. Have a great day.
Thank you.
Thank you.